Hello, I'm Craig Houliston from Nielsen IQ. Did you know that in the Philippines, 40% of consumers' expenditure goes to food and non-alcoholic beverage, whereas it's only around 8.6% in the US. So what this means is that it's really important for the Asian food markets, brands and retail to really know how to adjust to inflationary pressures so that we can drive sustainable growth in the market. At Nielsen IQ, we've recently surveyed some of the top Asia Pacific CEOs. And in our survey, we've asked them, what is their most anticipated impact to expect in 2022? What we can see is that 28% of them have stated it's the rising cost of raw goods and materials. And this is the top anticipated impact, above concerns over the slow recovery of consumption and consumer traffic. We've also asked these Asia Pacific CEOs, what is their biggest concern for the year ahead? And what we can see is that cost inflation is one of the key areas, also the impact of higher prices on the market share. Nonetheless, it's not just within their internal business where they have concerns, but also with regard to the consumer. These Asia Pacific CEOs are also very worried about whether consumers will be accepting of these higher prices, which will be drawn by the fact that we will have rising costs of raw goods and materials, and also the challenge of the lack of growth in disposable income. In this region, a lot of the growth was anticipated to come through the rising middle classes. However, with COVID and the struggles that we've had because of COVID, this has obviously had an impact. And this will mean that a lot of companies will have to change their strategy in terms of how to win in this region. So we asked these Asia Pacific CEOs in terms of what are your anticipated major changes in your business strategies? And what we can see is that there are different changes across the board. Definitely we're seeing things such as these leaders looking to focus more on emerging health, wellness and safety trends. There's a shift in channel behavior, focusing more on emerging channels, whether it be e-commerce, delivery apps. Also, with regard to investing in digital and online investment, there will be renewed focus there. But there'll also be areas in terms of where they need to refine things. And what we can see is that there will be a chance to rationalize their current categories where they play in. There's a bit of a mixture in terms of their anticipation of whether they will increase or decrease their frequency of promotion. But what's probably the most pertinent is with regard to price. And 56% of the Asia Pacific CEOs that we surveyed stated that they are looking to increase price this year. And it's interesting to note that 38% are still stating that they will maintain their price. But obviously this will be very dependent on the inflationary pressures that we are seeing. So in the next section, we will focus more about some of the insight that we're seeing directly from the Nielsen IQ retail measurement data and what we can learn from to help companies strategize to win given these pressures that we are facing. So let's have a look in terms of what are the market pressures which are driving inflation. So it's commonly thought that the sharp shipping costs increasing and also the pressures on international supply chain were the root cause of the inflation. However, there's more beyond this. As we can see, the rising cost of raw ingredients, also changes such as the rising delivery volumes are also having an impact. If we delve a bit deeper, there are actually some underlying factors which are driving this, whether it be extreme weather events, more labor-intensive operating models, or even the increasing demand of online and delivery. These are all having effects in terms of the market pressures. With that, we can see what are the key drivers. Actually, what we can see is that a lot of them are long-term. COVID is obviously a midterm effect, and obviously we're still feeling the effects of this, even as we're coming out of COVID. Nonetheless, what we do see are things like climate change, shifted consumption, the polarization of finance as people are becoming more and more insulated and more constrained, and also political events such as the war in the Ukraine. These are long-term challenges that we will face, which will imply that inflation will be here for the next few years. Within Nielsen IQ, we analyzed the FMCG data, and this chart highlights the Asia-Pacific FMCG growth decomposition. So let me explain a bit more in terms of this chart. So the black line is the value growth, and the gray bar is the weighted volume growth. But what we'll focus on here is the green bar. And the green bar is what we call unit value growth, which in basic terms is price change. And what we can see is that over the last few quarters, this green bar is getting more and more prominent. This doesn't necessarily mean it's pure inflation, because price change could be driven by a few factors. It could be absolute price changes, changes in promotion, changes in terms of whether consumers are trading up or trading down, or whether they are purchasing more larger or smaller packs. Nonetheless, it's quite clear to see that the impact of price is becoming more and more prevalent in this region. What we've done at Nielsen IQ is we've tried to analyze all the categories, and we've got hundreds of categories that we track, and we've taken 6 key markets: China, India, Singapore, Australia, Malaysia, and the Philippines, and we've analyzed every category. And what we have seen is that 83% of categories have increased their price versus 2019, which is a phenomenal amount. However, probably what's more interesting is the fact that 25% of categories have increased their price by over 10%. This is really highlighting the impact that we're seeing with regard to inflation and the long-term effects that this could drive. If we delve a bit deeper, actually what we can see are that some categories are affected more than others. So it may not be a surprise to many of you, but cooking oil is probably the most prominent. Whether it's a 32% increase in India, a 26% increase in Thailand, or even a 10% increase in Philippines, this is all big change. What we can see is that cooking oil has changed because of the poor harvests, there have been labor shortages, increasing demand from the biofuel industry, and obviously recently the impact of the war in the Ukraine. 50% of sunflower oil comes from the Ukraine, and 25% come through Russia. So obviously, as this war prolongs, this will have a longer term effect. It's also worth noting that in this region, there's been a lot of news around Indonesia and their banning of the export of palm oil and the impact that has had on adjacent categories. It's again worth remembering that with respect to cooking oil isn't just for cooking. It's also used in things like chocolate, noodles, margarine. So again, this will start to transcend into other categories. We can also see that it's had some impact on other staple goods. And I think we can all see that these are generally essential items that we're seeing that many of our consumers in Asia would be purchasing. Again, it's driven by things such as the poor harvest, manpower shortages, supply not being able to keep up with demand, especially for things like pork and ham. And even with regard to eggs, there have been some external factors such as bird flu, but also we need to think about the fact that rising corn and wheat prices will have an impact, because things like that will be animal feed for the chickens. And when we talk about chickens, obviously it's been in the news recently, the fact that Malaysia has banned the export of chickens to Singapore, and that leading to increasing prices. So again, with the challenges that we're facing in the markets, we will start to see that a lot of markets may start to contain some of their products within their market to try to control prices, which will have a negative impact on the rest of the region. And with regard to Asia, we are heavily reliant on our neighboring partners. So again, this could have a profound effect. So at Nielsen IQ, we also look at very deep advanced analytics. And what we're looking at on the left-hand side is looking at price elasticity. So how to read this chart is, generally, if one was to increase price by 10%, pre-COVID, one would expect a 23% reduction in volume. However, from our analysis, what we are seeing is that a 10% increase in price now equates to only a 19% decrease in volume. This is drawn by the fact that a lot of Asian consumers, obviously, even though they are constrained, they have been not being able to travel or buy a lot of luxuries. So more and more expenditure has gone into FMCG, but that doesn't mean that they're less sensitive to discounts. Actually, what we can see on the right-hand side is that as discount levels increase, we are seeing that in post-COVID world, we're seeing even more impact in terms of their responsiveness to the promotions. So in the past, pre-COVID, a 20% discount would yield around a 65% volume uplift. However, post-COVID or now, we would assume it to be around 102%. This doesn't mean that everyone should be promoting more and more. Actually, what it means is that people are still loyal to brands, but they want to get more out of what they're buying with their money. Not everything should be promoted. Actually, what we need to do is drive data-driven decisions to avoid value erosion. So what we can see is that across the region, it's inevitable that there are rising costs of goods. Okay, so 48% of Asia Pacific consumers are stating that they've noticed that their shopping has increased more than it did 6 months ago. This is just a reality that we need to accept. We can see it from the CEO survey, where the CEOs are stating that they believe that the impact of rising costs of goods is going to be the biggest impact. They are also very sensitive to the fact that consumers may not react so well to this. So again, this is just something that we all need to accept, that there will be a rising cost of goods. However, efficiency will be key. Even though we are seeing rising costs of goods, that doesn't necessarily mean that everyone has to raise their prices. Actually, what it can mean is that you can look for more efficiency in other ways. So whether it's trying to identify what is the right store to enter, again, there are over 18 million traditional trade stores in Asia. You can't go into all of them. So you need to understand what are the right stores to go after. It could be also optimizing your assortment. Okay, you may have many products in many categories, but again, as consumer tastes change, you really need to understand what are the right products to put in your portfolio and where to put them. And it's also around trying to understand the right frequency and depth of your promotion. As we've seen before, we are not stating that everyone should promote more and more. Actually, even though people are more susceptible to promotions, what you need to refine are what are the right promotions to drive, so you're not eroding your value. And from the Nielsen IQ insights, what we know is that 37% of Asia Pacific products are sold on promotion. However, what's really interesting is that 51.3% of these sales would have happened anyway without any discount. That means that we're throwing money away, and there's a lot of wastage in the market. And actually, when we talk to our retailers, what they're stating is they want manufacturers and businesses to drive category growth. That's what they want. And actually, what we've calculated at Nielsen IQ is that actually, if you're able to refine your promotions and optimize the right frequency and depth, we could actually drive an extra 3.3% growth in the region. So that would move the region from around 5% growth currently to around 8% growth, which would be back to pre-COVID levels. So again, this can give a lot of optimism to the market that even though there is strong inflation pressure, what we can do is by actually being very efficient and understanding the right strategy, you can actually drive similar levels of growth. So let's take a look in terms of some of the consumer dynamics. So at Nielsen IQ, we've recently surveyed Asia Pacific consumers, and we've asked them what describes best your overall household financial situation over the last 2 years. What we can see is that we've asked them whether they're strugglers, rebounders, cautious, unchanged, or thrivers. And what we can see is that 85% of them fall into the strugglers, rebounders, and cautious, which are generally those who are a bit more constrained. What's probably most notable is that 35% of them are stated that they're not necessarily impacted financially, but they're becoming more cautious with their spending. And only 15% are stating whether they are unchanged or thrivers. This will mean that it's very important for us to understand more about these consumers and what motivates them to buy. So we did ask these different consumer segments in terms of what are they likely to do to change their behavior. And actually, what we've noticed is that most of them are stating that they all realize that groceries are costing more than usual. And even those who are unchanged are stating that 43% of them are noticing that groceries are more expensive. And it's worth noting that for strugglers, 58% of them are really feeling it. And what this leads to is the fact that most of them are stating that they are changing the way that they shop. So you see that 97% of strugglers have changed the way they shop, and only 3% have not changed the way that they are purchasing things. Obviously, for unchanged, it's comparatively less, but still, it's only 15% of them have not changed the way that they shop. So again, understanding the importance of these consumer segments will be very important in terms of trying to strategize and win. We've also asked how these different consumer segments have tried to manage their household grocery expenditure. And what we can see, it's very varied across the board. You know, for the best part, a lot of them are shopping more online for better deals. There's a belief that people go online to buy better products at better prices. And online has definitely been one of the bigger winners. What we're seeing is in Asia is around 20% of sales now come from e-commerce. And obviously, as there are more inflationary pressures, we would expect more and more shift there. We can also see that some of the strugglers are also stating that they will select the lowest price from a repertoire. And even some of them, the second in order would be selecting the lowest price. So they might just buy anything, irrespective of whether that brand would be in their consideration or not. So what we need to do is really understand more about these consumer segments and how they will have an impact on your store or your brand, and really try to adapt strategies. For example, there's no point driving economy packs for your target consumer if they can't afford to buy an economy pack. So we really need to think more creatively to try to win with these different types of consumers. So in summary, what we want to share over the next couple of slides are more about what we're seeing both from a short term and a long term. As we've mentioned, the costs of goods are inevitable. And we also know that more and more manufacturers and retailers and businesses are looking to pass this cost onto the consumer. However, we need to be aware of the fact that there is a polarization in the consumer environment. As mentioned before, we have strugglers, rebounders, cautious, unchanged, and thrivers. And many of the people, 85% of them, feel worse off than pre-COVID. So we need to strategize around that. If we think more midterm, so the next couple of years, we just need to be cognizant of the fact that COVID has accelerated this polarization and has really changed people's purchasing decision priorities. So again, things like health and wellness are top of mind, but they want it affordably. And then if we look into the next few years in terms of long term, what we need to be aware of is the fact that the 2022 value chain model is prone to increasing costs. You know, we have longer term impacts such as climate change, labor intensive models, weak infrastructure, and third party dependence. So these challenges will require different strategies. So this is what we believe at Nielsen IQ are the ways that companies can try to win in terms of overcoming the inflationary pressures. So in the shorter term, try to review and align. So what do we mean by this is reconsider your value equation and how consumers make decisions. Again, value for money is very important to consumers. So demonstrating your proposition and what value means to the consumer for your product will be very important. Don't just implement price increases. As we've highlighted before, ways to drive efficiency can be ways that you can mitigate this and potentially retain the same cost, but have efficiency in your business. And you can do that by understanding your price elasticities. If you can understand what is the impact of you increasing prices, decreasing prices, both non-promotion and promotion, this can help you have an advantage over your competition. From a midterm perspective, we believe that you should pivot and prioritize. So again, try to evolve your product portfolio, play in different price tiers. Whether it's, if you're sitting in mainstream right now, think about how you can have a value proposition and a premium proposition as we have that polarizing consumer group. Also think about your pack size and formulation to try to keep it key price points. Also focus more on your product benefits and justify why consumers should be willing to pay more for your products. And then with that, try to innovate to meet these new needs. And longer term, try to think about how you can localize your product assortment and overcome the challenges of the supply chains. Try to think about innovate in terms of overcoming through leveraging new technologies, whether it be vertical farming or evaluating plant-based options. And obviously leveraging technology as a way to improve the production facilities. So overall, what we would state is to win and try to overcome these inflationary pressures, plan ahead and mitigate the risk. These inflationary impacts are not going to go away, but if you strategize right, you can win. Thank you very much.